Hello, fellow traders. Tis I, the Rumpled One, coming to you on Tuesday, February the 13th. The year is 2024. Let's talk trading. Trading with Walmal Greed Part 3. These videos are for educational purposes only. Your results may differ from mine and differ from Walmal. Walmal, you had a good day. Were you greedy?
No. I just had a lucky day where everything worked out perfectly. I made my core for the beginning of the day, and which is it's always a good thing. And then I was able to capitalize on the news because of that. And I don't think I was greedy. It was just I was taking advantage of the situation. And we were talking earlier, and I think I went on a little bit of a soapbox, not a rant, but a soapbox about why I did what I did. And let me explain to the listeners and viewers and what actually happened. I made my call for the day. I was up for the week. I've had yesterday was a really good day. Plus, I made the call today. This month, I've had a really good month so far. So nothing to complain about. No, I don't think I've had a single losing day all month, which is always a wonderful thing to happen. And I was up pretty significantly. So I decided, I'm going to take a chance and I'm going to go play the news, and something I don't do very often, but, if there's an opportunity, I'll go and do that. And one of the things that an old-time trader had told me through a book that I read many years ago. Don't ask me the book because I can't remember. I think I told Hero before. I wish I could remember the name of the book, but I can't remember where I got it from.
Do you still have the book?
I don't know. That's why I got to go. It's one of those things when I first started trading that I remember reading, but I got to go looking and see if I can find it. One of the good things that I do, I am a very big note taker. So what I'm going to do is I'm going to go back and look at my notes from that period of time to see if I can find it that way. But in any case, one of the things this gentleman had said was the purpose of capital is to allow you to go and play the game. And then what you can do is once you are in the game and you're in profit, what you now have is you got a very fortunate situation because now what you can do is you no longer are risking your capital, you're risking your profits, which seems maybe a little bit counterintuitive. But the thing is, his idea behind that was if I risk capital, it can take me out of the game tomorrow, or it can go or at least it can go and reduce the amount that I'm able to risk tomorrow because I've had my capital reduced. And so the idea is when you risk something, what you should be risking is what your profits are. And he didn't say this part. It's what I had said to TRO earlier. Now where you put your boundaries is where your profits are. Your boundaries could be, what your profits are for today, what your profits are for the week, for the month, for the year, whatever it may be. And that tells you how much you're allowed to go and risk, on a trade. And so what I did in this particular case is said, okay, I'm up for the week, I'm up for the month. I've made what I needed to make for the day. What I'm going to do is I'm going to go and risk it. And what I'm going to risk is I decided to go and risk basically about half of what my profits are so far for the month. That's a pretty big risk if you think about it. But the way I looked at it was I've already made more money for the month than I normally make for the entire month, and we're about a little bit more than halfway through. So worst case scenario,
we're not even halfway through. It's only the 13th. Yeah, 29 days.
Yeah, that's right, because it's leap year. So it's like, okay, I've got more than enough time to go make this up if something bad happens, but I'm willing to go and take the risk. So I took the risk, and basically what I saw the market. I thought that the market was going to go down just because the way it reacted with the London news earlier in the day. And then what it is, it did its normal little thing where it jumped up, and then after it jumped up, it came back down. And what happened was I put a pending out there to go short at a particular level, And guess what? It went and took my trade and just continued going down. And I had placed a couple other pendings further down. I put down 3 other trades further down, and I put a TP out there of something quote unquote unrealistic, right? Well, lo and behold, I've had 4 trades, and all 4 of them, they all got hit on my TP and made a spectacular amount of pips, which was wonderful. And the nice thing about it was once I got into profit, every time I went into profit, on it or placed a new trade because the pending got picked up, I moved my stop loss further and further down just to go and protect myself from, it coming back the other way. And so literally within probably a minute, I was in zero danger of losing any money. And at the same time, I had the opportunity for it to go and ride this thing down. And I wrote it down. I don't think that is greed. Okay, and some people would say, "Oh, that was," I even just said it. It was an unrealistic, goal to go and do that. Because what I did was I put my TP all the way down at 93.0, and it took me out at 93.6. Okay, and somebody would say, "Well, that was unrealistic for it to go and drop 90 pips." Well, here's a reality. Or a reality check, on all this. If it was going to go and do similar to what it did earlier in the day in the London hours, it likes to mirror things. It's just something that we see over and over again with the pound dollar. It likes to mirror things. You have to go and say that, if it goes above the 00, then it's going to go back below the 00 by the same distance, right? And so, I look at it, what's a good chance this thing's going to mirror what had happened earlier in the day. The difference was in the London session, it took quite a while for it to mirror it, to go and do it. Here it actually did it all within 5 minutes. Okay, so I got lucky in that sense. But at the same time, I don't think it was unrealistic. And having a TP that far away, let's say it went down only 20 pips and then showed signs that it was stopped and it wasn't going to go any further. Well, I could still have just jumped out. I was completely protected. There wasn't greed involved. It was just, for me, it was sort of like, that's a goal, and the reason why I think it was attainable, even though I said before it was ridiculous where I put it, was because a lot of times when it crosses a 00, which was the 2600, a lot of times it goes down to the 95. And if it goes to the 95 and it gets to the 95, it usually doesn't just reject off of it. It just sits there for a little bit back and forth. And so I had my TP sitting down at 93. And the reason why I had it there is because that way when price got down there, I could then make a decision, take the money off the table, or, okay, this thing is going to go back up, get out now, or stay in it. This thing's going to go and drop further, maybe drop down to the 75. I don't know. It's not an unheard of thing for it to go and do. And so that's the reason I did what I did. Again, I don't think that was being greedy as much as it is looking at the market, looking at what the charts are saying to me, and then taking advantage of it. So that's my 2 cents on why I don't think I was greedy today. Some others will probably go in there and maybe disagree with me, and that's okay. I'm happy with all my pips.
Yeah.
So I'll say I'm not greedy with all my pips.
Yeah, I just switched over to the H1 time frame on the chart here, and I'm noticing that the last hour it went and basically covered the previous day. It went through came down through the high and went down through the low, the previous day's low.
Right, and then if you look at that 1 hour chart, the 9 o'clock hour, okay, based on server time, that big candle there, that was the London news that came out, or the British news that came out, and it just rifled up 31 pips, all very, very quickly. It rifled up 31 pips, and then it came back, sucked back down, and then it went from there. It then went up another, another 40 pips.
Right.
So that's the mirror that I'm talking about, where it likes to mirror it in both directions. It's just that the U.S. news was quote unquote so good that it did it very, very quickly. So your thoughts on my scheme of the way I do things?
Well, the one thing is that, like you said, you normally don't trade the news. So I guess, like you were saying, because of what happened with the London news, you figured there was an opportunity. Is that fair assessment?
That's correct. That's a fair assessment, yeah.
Right.
Because of what it did. I mean, because the news that came out for London, it was, it was good news for the pound, but it was just barely good news, and it shot like that. It's sort of like, okay, normally when it does something like that, it's sort of like the market wants to move someplace, and I don't think it knows where it wants to move. So there's a possibility this thing's going to mirror. So I had that, that hunch. And you don't make trades based on hunches, but what you can do is you can say, that's interesting. There's something's going on here. And then when you go and get your opportunity to occur, if your hunch lines up with the opportunity that's presenting itself, that's when you capitalize on it. Or at least that's what I do. And the nice thing about this is, so traders know, we haven't gone up much from the bottom of all of this. We've gone up probably
16 pips off today's low.
Yeah. So, and that's actually it's funny because off my low I got 25.8. But in any case, there was opportunity in there for you to go and take some more trades. In fact, since then I've only taken one trade, but I took a trade I was actually on a 5-minute candle, which I rarely trade, but I did. And that is that when it came down and hit the 90 level, I went and came off there and then put a nice little tail in there. And what I did was, as soon as it turned that 5-minute candle back green, I went in and took a trade there, and I picked up like 4 pips, which was nice and easy trade. I wasn't going to stick in that trade very long because I was not confident at that point, because that happened on the second M5 candle after the news, and actually the first M5 candle after the news. And a lot of times they'll just do a shoot up and then they'll continue its drop, and I wasn't sure. So it's sort of like, well, why, I can hear somebody already saying, well, why didn't you stick with it? And, a realistic type of thing is that it likes to go back to the midpoint. You say that all the time. And yeah, it does. And there's a good chance we're going to get there. But the thing is, normally it doesn't do it on the very next candle. Usually you need to get some type of consolidation built in, basically building, what people like to go and call a support level. I like to call it a shelf. Same concept really, but just, some support there, and then it goes and runs up to the midpoint. That's just something I've observed over the years that it likes to do, and in this situation, it was okay, it's going to run up, or I had a signal, take the run up, but don't be foolish, and because if I hadn't, it would have run back down 10 pips against me. And then it would have been like, oh man, now I'm getting out with this loss, but if I would have just taken my 4 pips, which is what I did, okay, you're much happier.
Yeah, and see, right now it's doing that little range thing between the 95 and the 05, cutting across the double O, which is something that,
right.
Back in the day, me and Airball, we used to just live for the double O trades. But you know what, traders,
Yes.
the fastest 15 minutes in trading is over once again. So I hope you traders are enjoying the greed series. We'll probably do another part four, part five maybe. But always remember, never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.